Hey guys and gals, this is Blake Morrow. You're listening to the Face webinar. We're not sure where Dale's at. you know, um, don't worry. I'm sure he's fine. Um, I've been working on this time zone for the last 8, 9 years, maybe. I think I moved back home to my home state in Arizona. I want to say about 8 or 9 years ago. So therefore, I'm on a get up at 3 or 4 o'clock in the morning time for the last several years. So for the last 9, 10 years or whatever. I know it's difficult sometimes, especially for Dale. He's always in California trying to get up early. So I'm sure he might have missed his alarm or slept through his alarm or maybe forgot to set it overnight or who knows. But I'm sure he's fine. But he's not here right now, and therefore I want to take you into some things that I'm looking at ahead of the non-farm payroll today, because obviously the dollar. Let's see here, and that was a Kiwi. The dollar and the euro dollar has been, we broke through that 120 yesterday. Now I have to say that the euro dollar is really key support right now. Now I was reading a piece from this analyst at HSBC, and he had noted that every day in Europe for this week, there'd been, this week and whatever, there had been some serious euro selling flows that have gone through their bank. And he said this today in European trade, there's none there, or it was very light. So he was saying that, maybe the selling's done or it's exhausted. I don't necessarily agree with that. And the reason why I say that is twofold. First of all, we are now below really key support. Where we close this week is going to be very important. So if we close above 120 or below 120 is probably going to matter going into next week. We close above 120. I think anybody who's short is going to be like, yeah, I don't want to be short anymore. Or, we close below 120, you're going to get people looking at this thing going, man, we are probably going to see the teens soon. I think that's where we're at now. The reason why, in my view, why selling flows have probably abated for today is because, dude, if you're a seller, that there's jobs reports in the US. The biggest piece of data that we get, for the month is basically coming out today. So why prematurely, if you've got a lot of euro dollar to sell, maybe you get lucky and you get, some bad US data and the euro pops a little bit, you can sell at better prices. That in my opinion, that's probably what has happened. So I don't necessarily think it's dried up. I don't agree with that. It will be interesting to see CFTC data going into this next week, though. It will to see if we've seen any of this enormous euro dollar longs, if we've seen them, shore up some of their positions and see if they've really, unwound a little bit earlier in the week. But I personally don't think that we're going to see any of the CFTC data change until next week, because a lot of the selling has been the last couple of days. You can see clearly. All right. So let's talk technical. The euro dollar, while we're trading below this 120, I think you've got to be a little careful with it. I think we're up against, hourly channel resistance. I want to point out also the dollar Canadian, because we do have US and Canadian data coming out today. So if you go over to your calendar here and you go down to Friday, we have Canadian and US jobs reports both coming. Okay, you can see them right here, right here. I just passed right over them. So we are going to have US and Canadian data coming out today. So you got to be careful with the dollar Canadian, because we are actually consolidating really well at these levels. Now, I'm going to point out what I pointed out to our traders in the Forex Analytics community yesterday afternoon in our chat room. If you are short dollar Canadian or long Canadian dollars because you've just seen equity markets rip higher to all-time highs, you're probably thinking, man, I'm not getting really big bang for my buck. I mean, I shorted dollar Canadian. I've been shorting dollar Canadian all week around this 128 level. And, you know, the S&Ps have gone, you know, basically up 6%. What is that? 6% rally from the lows? So silly. 6.5% rally. So I've seen a 6.5% rally in the S&Ps, and the dollar Canadian has only paid me you know, 0.16% being short dollar Canadian. You see where I'm going here? It's held up really, really well. So if we get a weak Canadian employment piece of data, and there's been lockdowns in Canada, so that's the one thing that, you know, being that there's lockdowns, the job, you know, situation may be a little weaker than you'd expect. If we get some weak Canadian data, we might actually see the dollar Canadian pop back up towards 129. You know, we break out of this triangle, then we're going to be challenging some big resistance. As you guys know, and I know I've voiced my opinions here about the dollar Canadian. I believe it's basing, longer term basing, and if you are, you know, if you are short dollar Canadian, you've got to be thinking that. And position wise, like longer term position wise, you got to be thinking about that too. You know, the US dollar has actually performed very well against the Canadian dollar. It may not have performed as well against the Aussie. I mean, because the Aussie's not far off of its highs, or the Kiwi, really not very far off of its highs. You know, or you can say the dollar's, you know, off of its, not too far off of its lows against those two currencies. But look at the dollar Canadian. I mean, we've acted really well for an extended period of time. I'm talking, you know, we've really started to base going into December of last year, where, you know, the Aussie, you know, it was still rallying into January. Kiwi was still rallying into, you know, January this year. We really started to shift our tune with the Canadian and with the dollar Mexican peso as well. I mean, look at the dollar Mexican peso. This thing's been basing since November. And I got asked this question yesterday. And this got asked in the daily roundup. Okay. And we were talking about, I'm not going to tell you exactly what currency we were talking about, because it'll kind of give away exactly what I'm doing in the FX market with some of these commodity pairs. I kind of reserve that stuff for the Forex analytic, you know, because this is a conversation I had with the Forex analytics subscribers, you know, yesterday afternoon. But I'm gonna give you a little bit of insight of what I was saying regarding the Canadian and the Mexican peso, because I was asked, "Hey Blake, would you rather, you know, sell this currency, or would you rather sell, you know, Canadian dollars or Mexican pesos and be long the dollar CAD or dollar Mex?" And I said, here's the thing about the dollar Canadian and the dollar Mexican peso that you have to consider when you're trading at longer term. Like if I was going to try to establish the dollar Canadian long, like portfolio long, and going long looking for 140 again, I have to take into consideration why it might not move as well as some other currencies, because you have to think what's good or bad for North America. It is North American. These are both North American, or all three of them, dollar, Canadian, peso, are North American currencies, and they are the US's closest trading partners. So when you're dealing with other currencies that are outside of our continent, they will act a little bit differently. So that's why I wanted to bring that up. I think that's an important piece that you have to think about when you're trading the dollar Canadian, not specifically today, and dollar Mexican peso, not specifically today, but that is something that you should take into consideration while you're trading. All right. One of the other things I want to point out here is the dollar Mexican peso. It is, ooh, I just saw something. I'll have to go back and show you. The dollar Mexican peso is right up against some, you know, trend line resistance here. This is a major trend line. You can see it, right? You could argue that it's broke. Oops, shoot, that's just because I adjusted it. Um, I'm gonna be looking for a move above 2050, because if we move above 2050, that means we're probably going to challenge this big resistance zone. We get above that resistance zone and things look a little bit, you know, look a little bit bullish, I would say, right? So that's something to take into consideration as we are going into, I would say, this period where we have, and one of the probably best charts out there is this one. You know, you have the S&P and the dollar Mexican peso, the S&P being the green line, right? As you see the US or excuse me, the S&P rally into new all-time highs overnight, why isn't the dollar Mexican peso breaking into new trend lows? Yeah, we've been asking that really for the last several months, since November. What that also means is if the dollar, if the equity markets finally roll over, this is going a lot higher. And the way you can play that is, you don't have to necessarily say, okay, when the S&P breaks down, I'm going to buy the dollar Mexican peso. That's not necessarily the trade. The trade can be the dollar Mexican peso is now starting to break out higher. This may be suggesting that we haven't sold off in the S&P, but we are now ready to start moving lower. So you can trade it either way, but I think it's such a strong correlation because emerging market currencies really are the only currencies right now that offer any type of yield. In a yield starved world where there's so much liquidity and everybody's looking for something that's going to yield them something, in the currency market, the highest yielders are the emerging market currencies for the most part. You know, whether you're talking about the, you know, where, you know, Banxico, which is what, 5% or whatever it is, and or, you know, or you buy the ruble or the lira, or, you know, something other than, you know, 0% yield. But that also means that it unwinds fast if stocks go the opposite direction, because people have been parked in short dollar Mexican peso forever, because that's where you park your money. You sell dollars, buy pesos, and put it into something else to capture yield. Well, you know, when you have to get out of your other things, you have to get out of stocks, you're going to, you know, sell your pesos and buy back dollars. And that's why this is a very, very important relationship to understand. But it's more importantly, it's a huge, in my opinion, leading indicator. That's one of the reasons why I sit here and I look at the equity markets rally, and I know they're hitting all-time highs. I understand that. I'm still bearish because at this point, because I know this week's move was a short squeeze. Everybody last week, and if you look at the S&Ps from last week, everybody prepared for some sort of deleveraging out of the equity markets. Whoops, that's not what I want to do. Deleveraging out of the equity markets because they thought that, and I thought rightfully so, you know, a run up in GameStop would continue to crush shorts, which didn't happen, by the way. GameStop is actually coming back down towards reality. But, and, you know, as I've told you guys multiple times over the last, you know, week or whatever, GameStop's going back to 10. It's just a matter of time, however long it's going to take us to get there. Hold on. Yes, Stelios, please. That's going to be has to be what you have to do with the company account, please.
Thank you. Thank you.
So, yeah, and just tell him to ask him to reschedule. Okay.
Will do. Will do.
Yeah. So what was it? I'm sorry. We were talking about today's guest. Because Dale's not here, we don't know where Dale's at. So we're gonna, today's guest was Peter. Peter, if you're in here today, the problem is Dale's not, and so we're gonna try to reschedule you. Well, we will reschedule you if you are here and listening in. We'll reschedule him for another interview time. We're not sure what happens, Dale. It's not common to happen, or what him not being here is not normal. So we just hope he's okay. Anyway, going back to what I was saying, what the market was trying to prepare for and why equities were down. First of all, it was the end of the month, but B, if GameStop continued to squeeze higher, and let's say we, for some reason, actually rallied towards 700 or 800 in GameStop, that would have actually crushed so many funds, 0.72, Melvin Capital and all the and Citadel and all the other, and they'd have to unwind other positions. So you'd see a deleveraging out of other equities, and it would probably drive the S&P lower, believe it or not, if GameStop moved, because that's an outsized move in a company that had big positions in it. So it would have bled over into other parts of the market. But that's not that didn't happen. GameStop went down, and actually 0.72 ended up getting more money. they raised like how many more billions to just plow back into the market. So here we go. We got S&Ps, racing back up to highs. But one of the things that, I'm sitting here looking at is I'm looking at the divergence between these emerging market currencies. And look, I know stocks are at highs. I get it. Can they go higher? Sure. But I do think that we're getting really close to an inflection point. And I thought it was here last week, but obviously they hit the pause button somehow. So really quick, I'm going to turn it over to Steven Stelios ahead of the jobs report. As you can see, the dollar index is right up against key resistance. It is right up against key resistance in this jobs report, ahead of the jobs report. And guys, you just have to be really careful with the dollar here, because if you're short dollars, the inverted head and shoulder pattern still points to 92.70. We've come a long way. So dips now back down towards 91 will be pretty well supported, which we could see. I mean, I could see the euro, pop back up to 120.30, squeeze everybody that got short yesterday. I mean, it can happen, especially on a jobs report. So anyway, good luck, everybody. Steve Stelios. And by the way, really quick, before I pass it over to you guys, if you want to try to get Forex Analytics for free, you can visit our webinar sponsor, which is Pepperstone Securities, and open an account right here. That links your account to Forex Analytics, and you'll end up getting 2 months plus 2 months for free, another 2 months based on the amount of trading you do, up to 500,000. You do over 500,000, you get another 2 months of Forex Analytics. And if not, guys, make sure you try it out. It's $1 for the premium version to try it out. Then it's here's your monthly charges after that. The light version, which is only $19 a month, you get to listen to our advanced webinars, for our Forex Analytics community. So make sure you get involved. All right. Stelios.
Hey, Blake. Hey, it's just me. Steve is not here. He's probably picking up his son. So don't worry. I've got, I'll go through a few things for the next 10 minutes.
I'll be here too. I mean, okay. But if you don't mind taking the screen for right now, that'd be great.
Yeah, no problem. I will do.
Yeah. So how's it going?
I'm very well. Actually, somebody's asking 500,000 trading account and Forex Analytics is free. No, that's not it. You have to trade 5 lots. It's not the trading account.
Yeah, that's exactly what I said. No, you open a Forex Analytics account, you get 500,000 deposited in your account for free. That's exactly what I said. That is exactly it. Everybody should sign up today because you're guaranteed to make money.
That's a joke, by the way, everybody. Yeah.
That obviously is a joke.
I've taken the screen, so don't worry. I've got a couple of things to say, so
okay, please do.
No worries at all. So obviously the big thing today is payrolls.
Sorry.
It is. Thank God it's Friday. Yeah, it's been a weird week again. We had the silver squeeze on Monday. It feels like every week is like, a month these days. But anyway, the jobs report today should be important. And I think the reason why it's going to be important is that euro dollar, like Blake has said from yesterday, we've broken 120. That seemed to be a pretty important level. And I personally thought that once we do break 120, I thought the next 40 or 50 pips would have been very quick. But I think people are waiting for the report today, and like Blake said, sellers might be waiting for a better level in case we do get a number that spikes euro dollar higher. But I think the risk still is for the dollar to keep squeezing. It's been relatively benign, the squeeze so far, but we all know how it can build speed and momentum. So I think we're going to be waiting for this number and see what it brings. This is my kind of long-term view or medium-term view for the dollar index, which is half of it is the euro dollar, as we all know. So I think we're gonna squeeze. We could even go above the trend line. We could, I've said it before, 95, 96, we could get there. It's the market has moved in quite vicious ways recently, so it could easily do that, especially when it's one way. And so I think this is what's going to happen. I think in the medium term, the dollar should be going lower, but I think we're very ripe for a little squeeze. Talking about Canadian and the Norwegian krona, we talked about those yesterday. I just want to say once more, I'm very worried, and that's why I closed completely my Euro Norway shorts. I'm very worried because look, the Canadian.
I'll be back in 3 minutes. Sorry.
Yeah. I'm here. The Canadian. Okay, this is a weekly chart, but let's go to a daily to see better. The Canadian has been trading relatively sideways. It hasn't really gone down, and oil has gone $15 within a few months. And the krona is even worse than that. The Norwegian krona obviously has been strengthening, but only a little bit. So this worries me because traditionally these currencies, when oil moves, they will exaggerate the move. So they will overcompensate for the move of oil. So I'm a little bit worried. And frankly, if I was short dollar CAD, I'd be biting my fingernails now and saying, what else has to happen for this thing to really go lower? I mean, what? Oil has gone higher. The dollar, it's stopped its downward, at least for now, its downward trajectory. So I'd be a little bit worried. So, I've taken off my dollar Norway position. I'm just watching it, and I haven't looked at the dollar. I've taken, my Euro Norway position. But again, look, this as well, last few weeks, it's going sideways. And that would really be worrying me. Another thing I want to have a look at is metals. They have been on the spotlight recently, and I see on Twitter people saying, "Oh yeah, gold and silver, they're dead now. That's it." Look at the weekly chart in gold. For me, this looks like, you could say it's like a flag. It was this move from 2018. The lows, 11 below 1200 up to over 2000. That was a pretty steady move and clearly impulsive. And we're getting a correction. Obviously, it's not a flat correction, but it's still a correction. And I think the next move is going to be quite a bit higher. And I've said this before. Obviously, the silver shenanigans didn't help because gold did not move as silver was rallying, and now it's kind of retreating. Silver was forming this, what looked like a wedge triangle, call it whatever you want. It blew past it. That's where I got long. I got long actually on the day before, on Thursday, like 25.5-ish or something like that. I thought that, look, this was it. I got long. I added a little bit more, and now we're back into this zone, this zone I've highlighted for weeks and weeks. And I was always saying, close above 26.5 and I get long, a weekly close, and well, we're back there again. But anyway, I'm in this trade now. I want to add lower if we get there, but this is
by the way, Stelios, just so you know, Dale, actually his internet went down.
Okay. Well,
so he sent me a text. I keep my my phone on silent up until like, I think I forget what it is. It's 6. I should actually, well, it's because on the weekends I want to be able to sleep in a little bit.
Of course.
And so I missed his text.
It's okay.
And he texted me, he said, "Hey, my internet's down." He texted actually before we started, and I should have checked that actually. Yeah. But anyway.
That's fine.
So that's where
Dale's. Hey guys.
At. Hey Steve.
Hey Steve.
Do we still have a guest though?
No, we're rescheduling him.
Okay. So what do we do?
As in.
Well, we have non-farm payroll in 4 minutes.
Yeah. I mean, post that.
Whatever you want. You're Steve. You can talk for hours and hours and hours. So we can let you
Eternity.
go, and you can take. We can take. We can take the. We'll take the blinders off, and we'll take the rail guards down, and we're just gonna let Steve go and go and go. And so you guys can tune in for the next 3 or 4 days, and he's gonna go 3 or 4 days straight.
Whatever you want,
No, I
Steve.
mean, I don't think. I think we can just chat about the markets here for the next 30 minutes or whatever.
Okay.
Yeah. So if you want, I can take over the screen at least for the next few minutes as we head into the data, and then after the data comes out, I'm going to give it back to you, Steve, because I can pull up Bloomberg here, and then we can pull up Bloomberg and also Data Flash, so you can actually see how fast Data Flash is versus having a $2,800 Bloomberg system on your screen, and see how fast it is. So this is, let me go ahead and pull everything up. If you're on Forex Analytics, this is your Data Flash, right? So it's integrated into our system. Here's the dollar index. I'm going to keep it there. Oops, let me go find my Bloomberg. This is Bloomberg here. All right, let me move that out of the way. Let's see. There's the dollar, and I think we should actually probably just keep an eye on the euro, because the euro's in this. You can see this descending channel, and we know 120 is a big deal. But here's the 15-minute, and the euro is just kind of staying inside of that. I can put it on a 5-minute chart. It's staying inside of that channel. So, and here is the data. Let's see here, and that is, so just so you can see who's who.
Yes, Peter, thank you very much, and sorry about that. We're gonna reschedule. He just wrote to us that he's gonna.
He did. Okay. Yes.
Thank you very much.
Yeah, Dale is his internet went down. It went down today, and he actually sent a text, and he apologizes. It's just par for the course, right? So
yeah.
Anyway, so Steve, how's it going this morning?
Good, mate. How have you been?
Good. So we got a couple minutes. We got about a minute before the data comes out. So what are you thinking here in the markets? Not necessarily with the data.
Yeah, having to do with the data, with the market being where it is, I think that the market the data will either end up being irrelevant or cause some type of a pullback, because I really don't think it is extremely likely for the market to be able to rally further on the data. I mean, I think everything is overstretched in any case. So I think the risks are somewhat tilted, let's say, to the downside.
Yeah. Okay.
So you're saying it's going to go up, down, or sideways, basically?
No, I'm saying that I find it unlikely that the data are going to be a reason to continue higher.
Yeah, I get it.
More likely for them to be a reason to, somewhat correct lower.
5 seconds. Let's see.
If the market decides to pay attention to them, because we know that the market is not data driven anymore, right?
Now remember, this is the euro.
49, exactly as forecast.
As forecast, the euro's popping.
Oh, the revision is slightly. That's the same. Nothing.
Look at the unemployment rates.
Oh, look at Canadian.
Wow.
That's bad.
Canadian horrible data, but look at the unemployment, the US unemployment status, 0.4% drop, right? Despite payrolls not
and participation rate of drop 0.1 though. So that's a big drop. Sometimes it doesn't make sense mathematically, but anyway, it's okay.
So the euro basically popped right up into resistance here, right into channel resistance. Let's see how it reacts.
Theoretically speaking, based on the data, the USD CAD should be flying higher.
Well, one of the reasons why I think it pulled back a little bit on the dollar Canadian is just because the euro spiked up, right? So we'll see if the euro will hold, because the dollar Canadian should be pushing right back into resistance here. which it could, you know, and there's a good chance it will. So hey, Steve Stelios, I'm going to pass it over to you over the screen because I'm going to mute myself for just a minute. All right.
Sure.
Okay, mate.
Thank you, Blaker.
You can speak to your girlfriend, no problem.
You can spit.
Yes.
I,
Yeah.
I, won't- I won't tell your wife.
because her hair is done.
How you been, Steve? Good?
Good, Stel. How have you been?
Very good, very good. It's Friday, man.
How are the girls and the dogs?
weather is lovely. Yeah, everybody's good.
Yeah, the weather is unbelievable.
Futures are coming down. Just
Oh,
I need to point that out.
Yeah,
Okay.
let me also pull the 4-hour charts since we're looking shorter term. So this is the 4-hour picture here in the S&P. Let me switch to it. There it is. So we are approaching once again this ascending trend line resistance. We are in the short term once again very overdone. That's why I said that, you know, I think the data are not likely to cause another spike higher. It's more likely to cause some type of at least, you know, a short-term pullback at the very least. So let's see. Theoretically speaking, comparing, you know, the data, USD CAD, as I said before, let me pull it up on the 4-hour chart. USD CAD should be seeing a rather decent spike higher, which for the time being it isn't. Admittedly, this looks to me like a triangle in the making, which would imply,
A very shallow one, yeah.
yeah, which would imply at least like one more leg higher. Even so, even if this is a corrective rebound, which most likely is, the simplest possible explanation of how it's going to unfold is one more leg to the upside. Let's see if the data, especially the Canadian data, as we said, were horrific. Huge jump in unemployment, bad month data having to do with unemployment.
And hey, Steve, just remember that was also due to lockdowns in Canada, and I think it was Quebec and Ontario. I'm not 100%.
Yeah. There is no question about it. But as you know, Blake, as always, the question is not the question. The certainty is the following: wherever and whenever you have lockdowns, some of the businesses will not be opening again. We know that. Unfortunately, that's the case. So lockdowns do create a temporary, spike in unemployment, but part of it is not coming back, at least not immediately. So yeah, both Quebec and Ontario in lockdown. They're confirming here. So let's see. I'm watching this triangle. I think a push higher towards at least like this spike high at 129.50, if not higher than that. Is a likely development from here. Alternatively, I can tell you that if despite the data, USD CAD breaks lower, that's going to be extremely bearish as a development for two reasons. First of all, because ignoring the data, the market is going to move the other side. Second of all, because in total, this rebound will have proven to be extremely shallow. So, you know, once again, we will have remained in, you know, a very well-established downtrend, right? I mean, we picked post-COVID, I mean, post the initial like COVID market route, and we've been in a clean downtrend since. I mean, a sequence of lower highs, right? And this is going to be another lower high. So, you know, if the market fails to rally even despite that, you know, that's going to be extremely bearish. Speaking of which, here is also USD NOK, right? The situation is rather similar. You can see this. So far, the rebound is nothing to write home about. And we've also mentioned, by the way, the divergence, we've mentioned it during the previous days with crude oil, which crude oil, speaking of which, posted another new high today. So it was like the 5th consecutive day. And this time around, we actually, as you see, if I zoom in, we tested the bottom part of this horizontal support resistance area. And don't forget what I said when we were breaking out, that I think there is a very decent probability that this move higher from this bull flag might be the final one before we see a deeper correction lower. So let's see if today, having tested the bottom of this zone, we can actually find some kind of a high here in crude. And quite clearly, if crude tops out here, then this divergence with USD CAD and USD NOK can start playing out, especially if we see some risk off as well. So if the markets today, for some reason, decide to turn lower, and crude already showing, some signs of weakness from the highs of the day, then perhaps, we can finally see this, correction high in USD CAD and USD NOK play stronger, especially, following the data. But all those are like ifs and buts, right? And those are not enough to fade the trend. I mean, you can do it taking into account the risk-reward ratio in the short term, because there are some good risk-reward ratio opportunities, but you shouldn't take your eyes off the ball, which is, and forget that so far the trends have not been invalidated. Actually, if you're asking me, the only thing that during the past few days has actually turned, I mean, somewhat decisively turned, is USD yen, nothing else. USD yen is the only one that has produced some real technical developments. It has already broken out from 2 trendline resistances, which is quite, important. The move higher looks, rather healthy for the time being. I do think we should extend towards at least 106.50, which we find the next area of resistance. Other than that, anything else isn't a confirmed reversal yet. And Euro USD, which has turned some time ago, we've already said about that it had been producing a correction. Everything else, I mean, let's take the example of the Aussie. The Aussie hasn't even broken down from what could be just a bull flag, right? Just take the example of the Kiwi. Same thing. We just saw before USD CAD and USD NOK. They haven't really broken out. Take the example of cable. It hasn't really broken down. I mean, yes, it keeps failing repeatedly to penetrate through 137.40. So what? On the other hand, it keeps failing repeatedly to accelerate to the downside to confirm that we've actually topped out. Now having to do with the metals, we did have a strong move lower yesterday in gold. Not a surprise there. We've talked multiple times about this being a pennant, most likely. Now, ideally speaking, I would love to see a lower low since it's unfolding like this. So ideally speaking, I would like to see a move below 1764. And I would love to see the sentiment, becoming more bearish. Despite what happened yesterday with gold, silver hasn't even broken through the soft support. So, we still keep seeing this divergence, which is, clearly depicted in the fact that the gold-silver ratio remains, under pressure. The gold-silver ratio also topped out when the markets bottomed out, right? I remind you that this almost 130 level that we had in the gold-silver ratio was an all-time record high, right? It was, in essence, an anomaly because 130 ounces of silver to buy 1 ounce of gold was clearly mispricing silver in regards to its gold equivalent. And I'm not saying that in retrospect. Once we passed over 100, we kept saying that the gold-silver ratio is overdone and it should eventually mean revert, as it has done. And usually, and we know that anything you look at, when the last part of a move is parabolic, like the one you see here, then the move to the other side is going to be extremely sharp. Now, I don't know if, for example, you can think of other recent examples. Don't say we didn't warn about it, right? This is GME, GameStop. Guess what?
Incredible, right? Incredible.
Yeah, guess what? Imagine, and if you remember, I said it here on this webinar. I remember I said that, listen, people that are buying into the chatroom BSs in Reddit or whatever, and for example, bought the spike in silver, at least these people, if they hold on to their silver, they will eventually definitely, in my opinion, make money. But the people that thought they're going to stick it to the big man and were buying GameStop at 300, at 400, at 450, if you're asking me, GameStop is never, ever going back there. It's, in my opinion, 10 times more likely that the next stop for GameStop is eventually going to be 0 than ever visiting 480. Yeah, as DJ says, same story, different ticker. Exactly. So a lot of people have lost a lot of money from the retail crowd here. And when I mentioned that several days ago that they're going to lose a lot of money, told me, no, they're not going to lose a lot of money because they have limited risk because they were buying call options. Trust me, I know the mentality of a gambler, and I know, I'm not one, but I know several gamblers. And I know the mentality of amateurs, and the mentality of amateurs is, I'm going to average in because it's going to turn again. So yes, initially a lot of them bought calls, and they had a specific limited risk, right? But I'm pretty sure that many of them bought again and again and again and again, trying to average in and, try to get out of this position with a profit or at least not losing money. And guess what? They've ended up probably losing a lot more than they initially quote unquote invested. So, any questions? Platinum, yes. Let's see. Stelio, since today we had this, I'm thinking of just, making today's session like, just, staying here and
continued, right?
yeah, making it free for all.
Free for everybody, yeah.
Yeah, once in a while,
Once
if
in
that
a
happens.
while, yeah, we're gonna do that. And
yeah, we can do that. I mean, there is, once in a while, there's no reason not to. Okay, so Platinum, look at how nicely Platinum is holding up, right? Look at this. This is another one we had looked at and I was talking about. This is the gold platinum ratio.
Oh, so are we gonna? I'm sorry, I hate to interrupt. Are we gonna move this right into just bias chart analysis in a little bit?
Yeah, Blake, I think since this happened, I mean, why not give a freebie once in a while when this happens, right?
I guess. Yeah, of course.
Okay.
Okay. So yeah, just I'll be back in like 15, 20 minutes.
Okay, bro.
And we'll do the bias chart. Okay.
Okay, mate. So just look at this. Look at the last move higher in the gold platinum ratio and look at the retracement lower, right? The fact that we've broken down from this descending channel tells me that we have a lot more to go. Also, let me remind you what the big picture is here. Right?
Yeah, it used to be a lot lower, right?
It used to be at 0.40 and it had spiked up to 260.
Wow.
Just for those that believe that, yeah, this should be a bottom, right? Nope, not necessarily. Theoretically speaking, it can retrace a lot more than this. And when I say a lot, I mean a lot, right? So, keep that in mind. Sure, let's cover cryptocurrency. I saw the euro pound. Okay, let's start from the euro pound. Euro pound. Listen, I talked about the importance of 82.40 as a support area. I said yesterday that, listen, somebody asked me if this is a descending wedge, and I said, listen, it can be a descending wedge if we fail to accelerate lower, because 88.40 is important, but we haven't accelerated lower yet. But 88.40 remains like, a pivotal area, key. And guess what? Yesterday we accelerated lower. So I think it's quite clear. As long as we trade below 88.40, the path of least resistance is lower, with the next area of support being at 86.80. Okay, that's what I think is the case here. Yeah. USD Swiss. Yeah, actually, we haven't visited that for quite some time. So yes, absolutely. Listen, USD Swiss has triggered an inverted head and shoulders formation. I mean, it was extremely clean, right? You can see it here. I mean, almost a textbook head and shoulders formation. The target of which points to, what is it? 91. So that's it. As long as we trade above 89.30, which was the neckline of the head and shoulders formation, the target is 91. Nothing else to say about it. I mean, clear formation. And also, since we haven't visited that for a long time, have a look at Euro Swiss as well, which is, unsurprisingly,
which is basically the SNB.
Yeah, which is unsurprisingly consolidating in what looks like a triangle. Now, theoretically speaking, and I know that this market is like hugely manipulated, and it's one of the, I mean, the vast majority of the markets are manipulated one way or another. At least this market is openly and admittedly manipulated, right? I mean, they're not even attempting to hide it. Now, from a technical analysis perspective, ideally, you would expect something like this, right? But, with this market, God knows. I see questions about cryptocurrencies. We're going to have a look at them. I see USD, INR, and the indices of India. We're going to cover those as well. Okay, so let's go one by one. And Blake is going to come over then for the bias chart. So one by one, let's start with cryptocurrencies, and then I'm going to go. If you remember, I was quite clear about Bitcoin. I had said, listen, I don't know if this is a flag, meaning a channel. I don't know if this is a triangle, but whichever of the two formations we have here, they're bullish. They should get resolved to the upside. And yes, they have. That implies a higher high. So that implies something like this. Be careful. I believe that this move higher is going to be terminal, meaning I think it's going to be followed by a deep correction. And here is Ethereum, which is doing something else more interesting, which is it formed an ascending wedge, and quite a steep one. I mean, not the steepest one I've ever seen, but a rather steep one. And it's now going completely parabolic, breaking through the wedge. I think this move is unsustainable. So it can extend more, but I think it's unsustainable. So I think this sooner rather than later is going to fail and also produce a deeper correction. Probably after Bitcoin produces a higher high, Ethereum is also going to fail, and probably both of them are going to have a very sharp corrective move lower. So be very careful. I think chasing either of them up here is outright stupid. My 50 cents. And now I'm not talking fundamentally. My fundamental bias about cryptocurrencies. I don't understand why they have or they should have any intrinsic value, But that doesn't make me blind to the technical perspective. And since it's a market, and markets are purely moving on demand and supply, and even if it's a bubble, and I'm right that it's a bubble can sustain itself for much longer than you would expect. What I'm telling you has nothing to do with any of my fundamental biases. I'm talking now purely what I see on a chart and what I would see on this chart, no matter what the ticker said up there. I would tell you the same if it said, some kind of a currency or some kind of a stock or whatever. I don't care. When I'm examining something from a technical perspective, I really don't care what the ticker is. I'm just, looking at the formations and, from my experience, etc. I just, silver, I said before, found soft support here. Listen, I'm watching this ascending channel, and this is going to tell us if silver is also going to have a deeper correction as gold or not. So, that's it. That's what I'm paying attention to. Now, pound Kiwi, and then I'm going to go to the Indian stuff. Okay, let me go through the crosses because somebody else asked about the other crosses. So, Euro-Aussie. Euro-Aussie, corrective rebound, in my opinion. You can see the difference in momentum to the upside than it was to the downside. It has also broken down from a long-term formation, bearish. Euro-Kiwi, same deal. You can see the long-term trend line we have broken down from, bearish, until proven otherwise, which it needs to do a lot to prove otherwise, bearish. Pound Aussie, the only one that hasn't broken down from its long-term trend line, the only one. Here's the trend line I'm talking about. But I think that this rebound is also probably corrective. So, I think the path of least resistance eventually is lower once again. And pound Kiwi, I've talked about pound Kiwi. I think pound Kiwi has one of the cleanest technical formations, and I'll explain why, for two reasons. Both if you want to be bullish or if you want to be bearish. One, because it has broken down from a very long-term ascending channel, right? Stelio, are you still here, mate?
He's not. What's up?
Can you send a bell notification for all the clients to know that we're going to be on this webinar today?
Oh, yeah. I'll do that right now. Okay.
Thank you, mate. So pound Kiwi, in my opinion, is one of the cleanest. Either you want to be bullish or bearish for the following reason. And the reason is this: we've broken down from a long-term channel. We've retested this trend line support as resistance multiple times, again and again and again and again, and we've kept failing. As long as that's the case, the path of least resistance remains lower. Now, the other side of the coin, if we actually manage to break back within the channel, that's going to be a false breakdown for a long-term formation. And somebody can also claim that this looks very much like an inverted head and shoulders formation. But Steve, it's not an inverted head and shoulders formation because this shoulder is lower than the head. And I'm going to answer to that. Not if you're looking at closing prices, which are way more important. Okay, so keep that in mind. Now let me satisfy our Indian friend about USD INR, which I have nothing really to tell you about, and I'll tell you why. I was looking at it yesterday. Look at this persistence. Still trapped within this triangle, going nowhere, coiling actually. The good thing about it is a breakout, I think, is going to accelerate one way or the other. Okay, so we break down from like, what is it, 72.70. I think we're headed lower quite fast. We break up through this trend line resistance. I think we should accelerate to the upside. So what's this symmetrical triangle? And that's what I'm going to tell you everything you want to know. And having to do with your request for Nifty and Bank Nifty. shallow retracement in Nifty. I had already said anyhow that probably this is going to be a corrective move, which worst case scenario should take us back to the previous high. We've produced a higher high, although pay attention, and that also applies, guys and girls, to the rest of the indices. Pay attention to the huge momentum divergence. Huge. So I would be very, very careful, because I think that a lot of people are going to get very long again, and we might finally see a much deeper correction unfold following that. Okay. And Bank Nifty, and then I'm going to pass it on to Blake. Bank Nifty, also shallow correction, a new high. Also be careful. I think it's due, RSI diverging for quite some time. I think it's also due for a deeper pullback sooner rather than later. So definitely not buy. I wouldn't be buying like, up here. Actually, that applies to all the indices. I mean, until we see a healthy correction, buying here is just following FOMO, and there is a very big chance that you're going to regret it. Okay, Blaker. I don't know if you're still if you're here or you need more time, mate.
I am here. Sorry, I clicked the wrong button. Yeah, I was just actually long some dollar Mexican peso down here at 22. I was just making sure.
Let me have a look at it, by the way, since you mentioned it. USD MXN. Yeah, on one hand, it's very nice how we broke back within this broken channel, right? It seems to be coiling. Yeah, I think it might have at least one more leg to move higher.
Let me just, I'm going to give you the short of what I told everybody today. Look, here's the dollar. Oops, here's the dollar Mexican peso. Here's the daily chart. This is the base, right? This is the S&P. The S&P continues to hit new highs. This is a real, I mean, you know the relationship, so I don't have to explain it in depth or detail.
Absolutely.
But the problem here is that, these emerging market currencies aren't even acting well. So if stocks do roll over, the dollar Mexican peso is probably going back to the mid-20s. It's probably,
and then another market that confirms this divergence, and I had overlaid the other day, since you've already taken the screen, pull up on your screen, please, CAD USD, not USD CAD, CAD USD.
Oh, look at that. Yeah.
Yeah. And now change the market to crude oil. Change the overlay to crude oil, and you'll see that there's displaying the same type of divergence. US oil, just type US. I think. Oh yeah, WTI, whatever it is. Yeah.
Oh, that's not what I want to do. So let me get rid of this one.
So both crude and S&P are diverging with the markets that they're usually very well correlated with. And as I was saying the other day, Blake, I don't think this is sustainable.
There you go. Yeah, I could see that. Yeah, and so and I'm sure you could probably with this divergence, and you have crude and So basically, what you're saying here is if crude and the stock market pull back a little bit, we should see a rally in the US dollar Canadian.
I think somebody has to do some catching up, and from my experience, I would say that's the indices.
Yeah, that makes sense. All right, well, Steve, I'm going to get this bias chart done, and so the dollar, the dollar Mexican peso. I'll just go back to it really quick. I was buying some of it down here, and I'm going to try to trade and do the bias chart at the same time, but we'll see how that goes. The euro dollar just got finished squeezing everybody above, the 2020 level. You can see we're pulling back. If we get back in the 119.90s, then that squeeze is over. So think about that. If you guys are trading the euro right now, in my opinion, while we're below Remember the this is one, there's the 120, it's actually 120.10. If you go back, let's go back to the 4-hour chart or the daily chart or the 4-hour chart. Okay. So the high here, I believe that high right there is 120.11. Okay. So knowing that it's 120.11, we just basically squeezed right past that 120, you know, this is 120.11. So I can actually grab this and move it a little higher, right? That was the breakdown point. That was the breakout point. That's obviously key resistance. So now, you know we just squeezed a 120.23. So that is going to be resistance now. Oh, shoot. Sorry, guys. There we go. All right. We're doing the bias chart with you guys because Dale wasn't here, and this is kind of more of what we do with Forex Analytics subscribers on our own after the face webinar now. So let me go ahead and go 120. What was it? 120.23. That's going to be resistance today. I'm going to say this, and I'm going to say while we're below that level today, you got to be bearish. Now, that doesn't mean that we're going to close below there. Anybody who's bearish wants to see the euro dollar close below 120. That's it. But I do think that support now intraday, if we got down to 119.70, you're going to find some buyers down there now. So you got 119.50, 119.70 as support. Okay. The cable. So here's the sterling. Sterling's, overnight we were looking at this level because it is the ascending wedge, right? The ascending wedge we were watching. That was the breakdown point. And guess what? We just popped right back up to the breakdown point basically, and we're still holding it. And that's a 78% retracement. So I'm going to say 137.20 is good resistance right now. 137.20 is good resistance right now. I do think we're range bound, especially after the Bank of England yesterday. You know, the Bank of England basically said, hey, we're nowhere near negative rates. So, you know, don't think about it right now because we're not thinking about it. That doesn't mean that it won't pop up, but they're really trying to suppress that idea. And that's what created that massive squeeze yesterday. So today, what I'd be looking for is, you know, anything back down to 136.50 is going to offer us near-term support. Let's see. Hold on really fast. I don't know if I want to do this right now. Damn it. The thing is, when I'm doing this analysis, I cannot focus on my trading at this moment. Usually I got about, I because it's non-farm payroll, I took, you know, obviously some positions. So some positions that are fresh that I need to manage. So you guys have to bear with me if I pause and, you know, I have to think about things for a second. Okay. Anyway, here's the Aussie. So the Aussie is still, while we're below this, let me get rid of this really quick. We don't need that. While we're below 76.60, you guys remember that's resistance. Support is going to be 75.65. So oops, that's 75.65. And this would be 76.60. And that, I believe, is key resistance, right? And I'm, you know, what is that? Okay. So I still believe while we're, you know, below this 76.60 level, you got to remain bearish because we came out of this ascending channel. And I think about like the other night when we were back up here, it's like, okay, well, you know, here we are again, you know, right back up here. It's not like it's going anywhere at the moment, you know. So I think near term we have to stay bearish while we're below that 76.60 level. Let's go over to the Kiwi. So here's the Kiwi. Resistance, this is a big wedge. So this is easy, 72.06 and 71. So it's really easy and it's going to stay that way apparently for today. I don't believe that we're going to be moving out of that. Okay. And it's a range. Dollar CAD. The dollar CAD, we're still, believe it or not, we're still inside of our triangle here. And we're holding it. Now, you got to think about that because, again, I think that this breakout is looming. And as we were just, Steve and I were just talking about the dollar CAD here, it is really one of those situations. If stocks ever roll over, you have to be long the dollar Canadian. Now, I just said if stocks ever roll over because, you know, jokingly, it's like, I don't know if they're ever going to roll over. I mean, jokingly, not jokingly. I mean, it's crazy. But anyway, right now the triangle is supported by 127.80 and resistance is going to be, well, we can just write 128.40. 128.40, 127.80, and you know, we just wait for that range to break. I as I've explained to you guys on many occasions, I think we're building a really nice base. You know, if stocks are at all-time highs, dollar Canadian should be down at 125, but it's not. And because it's not, you have to take that into consideration. I think it looks a lot better than, you know, than people believe. Dollar Swiss. So the dollar Swiss, one of the things when Steve was talking, I also picked up the dollar Swiss at 90.10. Look, if you use Forex Analytics, here's the basic technical analysis, my update from this morning. Dollar Swiss pared back gains to the 90 level overnight and is back to the 90.30s, well above the 90-cent level. The market remains bullish. When we dipped down there, I bought it. Okay. And I bought it and I spun out of it. I bought it at 90.10 and I got out of it at 90.16. Just as soon as I started doing this bias chart analysis, and Steve asked if Blake, are you here? So that's one of the things that I was doing intraday. And I'm going to say that while we're above 90, the risk still is to 91.80. Well, now we have to just, it's 91.95. This is where we complete the inverted head and shoulder pattern, but I still think that today 90.45 should offer resistance. It's not a big mover, but it's bullish. Now, why is it bullish? Because we're in an inverted head and shoulder pattern. So it's still bullish. Okay. It just is. And it's, you know, the neck, I could come all the way back down to 89.50 and still be bullish. I'm hoping it doesn't get all the way back down there, but you know, it could. In today's environment, it could. I'm not saying that it can't. Okay. US dollar Norwegian krona. So the US dollar Norwegian krona is still holding this major trend line. That means we have to break 865 to turn bullish. Unless crude gets dumped on its butt, I don't see that happening today, which, you know, it's Friday. So crude, that could happen, but I don't see it happening. 865 is really key resistance here. And we can't, and this is one of those that, and remember 865, the reason why it's so key, because this is the breakdown point from August. Support right now is going to be 855, right? So $855. We have to stay in range, but we are really close to flipping bullish here. I don't think it's going to do it today unless the euro, you know, takes a 40 or 50 pip spill right now, and then you know, and you see stocks roll over a little bit. You're probably not going to see that happen. I mean, we're just right now we're just kind of bouncing around these ranges. I'm watching it very carefully because I'm long some, but I really want to be aggressively long, but I can't do it right now, not based on what we see. And you know, there's probably a good chance that we just slip back down towards these support levels. Okay, let's talk about that's the US dollar, Norwegian krona, dollar mex. I think did we already write down dollar mex? We have not. Okay. So the dollar mex, very similar to the US dollar, Norwegian krona. Matter of fact, what may be happening here is this. We might be building a consolidation. So, think about that. This dip has been contained by the 618. So the 786 comes in at 2016. That should offer support today. Resistance. Well, I mean, I think we'd be really lucky to see 2036 again. Oops, 2036. And then I'll go ahead and mark up 2046. Okay, and I'm going to keep it in range. You guys know I want to flip it to bullish, but I can't do that while we're below this trend line. We are flirting with it, but we're not above it yet. We're trying, but it's not quite there. And look at the Dow just hit all-time highs, I think. Well, we're just, I think. Oh, so close. So close. Oh, we're getting there. We should be there today. All right, back to dollar max, dollar yen. Okay, so here's the dollar yen. So the dollar yen, let's go out to the daily chart. So this is the 200-day moving average. Just keep that in mind. All right. We briefly broke these highs. So that's a bit of a risk for dollar yen longs that we weren't able to capitalize on. Well, not yet anyway, the 200-day moving average, and then also this, possible breakout. So I'm going to mark up today's highs that are important. So it's 105.76. I'm going to make that, I'm going to put an asterisk next to it because I do think it's important. I mean, we're bullish right now, but in order for us to retain the bullishness of the dollar yen, we really need to hang on to these levels. If we pullback should be limited to this right here, because this is a pretty bullish trend that we're dealing with intraday. So we should be limited to moves down to 105.20. We'll see. It's not going to be, that's not great support, but it is support for now. Dollar index, I know it's down right now, but hey, look, when you have an inverted head and shoulder pattern, and we're going counter trend, it's not going to be a straight line. We're not going up in a straight line. Not in this environment. If stocks were coming down, the dollar index would be flying right now, but it's just, this is just a 2 steps forward, 1 step back, 2 steps forward, 1 step back. That's all this is happening right now. Support intraday will be at 91. Resistance, obviously, I'll mark up the highs, as a matter of fact. See that, and also right here. The high matches the previous low here and pretty much that high, but I'm going to just mark up the 91.60 as resistance, 91.60, and that should be really good resistance. I doubt we'll see that again today, but remember, we are still bullish, especially while we're above 90. We're bullish while we're above 91. Okay, so gold, if I was long gold, I'd be really, really concerned. And you got to watch it today because, yeah, gold spiked up, but just gave it all back. I mean, if gold starts breaking, I mean, we can't even get back above 1800. So, I mean, resistance could be 1820. Really key support becomes 1765. And if that breaks, we got all sorts of problems, because then you have a false breakout in gold. We should be trading back down at probably 1600. And somebody in our chat room asked about some dude, I've never even heard his name before. And he's like, what do you think of his analysis? I'm like, I don't even know who he is. He goes, well, let's start off his projections. He's looking for gold to 1,000. I'm like, oh, he's one of those people. It's like, okay, gold's going to 1,000, or if somebody gives you the gold's going to 1,000 or gold's going to 30,000, they're not giving you actionable ideas.
Blake, tell the guy that I'm willing to sell to him, to buy from him as much as he wants at 1,200.
Yeah, well, it's just
because I'm a cheap bastard.
It's just some guy that's got a YouTube channel, I guess. I don't know. I don't know. I have no idea. But some analyst person. But yeah, I mean, it's like, what are you supposed to do with that information? Oh, I think gold's going to 1,000. Great. Is it going there now? I mean, is that what we're going to see today? I mean, I think we'd be lucky if we say 1820 today.
Honestly, I don't understand some people. For example, just fundamentally speaking, I mean, no matter how somebody agrees or disagrees, how can everything that has intrinsic value be going up for decades, but they believe that gold, for example, is going to be cut in half under current circumstances? I really don't understand it.
Yeah, I don't either. I don't get it, Steve. But look, I'm gonna put this as bearish because we are trading below 1,800, and below 1820 specifically, because remember, this is an inverted head and shoulder pattern gone bad, and I think if you're bullish gold, you got to be really careful if we break below 1860. I actually do think that gold is at risk of a pullback towards the 1,1700 level.
Yeah, absolutely. Still unfolding some kind of a complex correction. So I'm with you. In the short term, it's still bearish.
There's a big false breakout here. This and silver turned, and people are long. Just they got long gold and sympathy. So I actually think gold is bearish near term. And I think the risk is that we can break below 1760. I don't think we're going to do it today, but you got to keep your eyes open, and eyes peeled, because yesterday's move was pretty aggressive. S&P. Well, what do I say? Last thing we'll go here is I'm getting squeezed currently, and I shorted it earlier this week, and it's up in my face, and it's like we're back at channel resistance. This is the one thing that's really just kind of ruined my week from being a decent week, is I've got this thing up in my face, but again, if you missed it earlier, the market was preparing for a possible meltdown with, GameStop, especially if the risk would have been if GameStop would have continued to squeeze higher, it would have really crushed the funds that, like, the Citadels of the world that are short with Melvin Capital, and they would have forced them to liquidate in other areas. So I think the market was preparing for some deleveraging, plus it's the end of the month. So we got this false breakdown. Here we are. False breakdown leads to breakout, and now we are here at breakout. I'll be surprised. I'm interested to see where we close. If we close back below 38.70, I'll probably keep my short, but that's going to be support today, 38.70, and it looks like 3,900 is the next level of that we're of interest.
Blake, by the way, they've asked of us, and I think it's a fair request to add silver as well on the bias chart.
Well, let me ask, who's asking?
One of our clients.
If it's one of our clients, I'll take that into consideration.
Okay.
All right.
Okay,
so with that being said, Steve, I'm going to wrap up here. I got to get back to trading.
Yeah, mate. I said what I had to say. So just, we say have a good weekend to everybody.
Oh, yeah. Stelios is back. Hey,
I'm here. I posted the bias chart. Everything is in its place. So
awesome. You did get it. Okay.
I got it.
I want to thank everybody for being here. Remember, we go through this bias chart analysis every day. We start actually about right at this moment, and then we go for as I finish up, and then Steve and Stelios are here to answer questions, and I answer a couple questions along the way, because I just want to make sure the Forex Analytics clients are really taken care of. And obviously, I thank you guys all for your continued support. But my number one priority are people that are in our community. So if you want to learn how to be part of our community, it's real simple. It's $1 to try it out for 10 days, or you can try the light version for $19 a month. After your 10 days, here's your the premium. Premium gets you into the chat rooms and the advanced analysis. But both of them have the mobile app. And if you want to, learn more about it, just, come, it's $1, come hang out. And then you can hang out in some of the, advanced webinars that we have throughout the course of the day, because there's the European crossover, the daily roundup, and Phase 2.0 that is specifically for Forex Analytics clients. So, all right, guys, I'm out of here. Steve, Stelios, you guys have a great weekend.
You
Thanks,
do, mate,
you
and
too.
everybody else.
Thanks,
You
everybody.
guys have
Enjoy.
a great one, guys. Bye-bye.
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 Steve, I think you're going to have to end the